Right. So we are starting with the first question of consolidation from September, December 2025 exam of SBR. So let dive in and start with it. Right. And there we go. We have the scenario in front of us that is Woodfleet. Woodfleet is the parent of the Woodfleet Group, which has a presentation and functional currency of the dollar. Financial statements are prepared in accordance with IFRS accounting standards. The financial year end is 31st December 2005. The following exhibits are available on the left hand side of the screen provide information relevant to the question. First one is sale of shares, provide information about the sale of a proportion of Woodfleet's holding in Burton Group, a company whose functional currency is different to the presentation currency of the Woodfleet Group. Hedging arrangement provides information about a derivative contract which Woodfleet entered into during the current period in order to mitigate foreign currency risk. Intra-group transactions provides information about the transactions between group companies during the year. Draft consolidated SOPL and OCI statement of profit or loss and other comprehensive income of the Woodfleet Group for the year ended 31st December X5. The information should be used to answer the question requirements within your chosen response options. So far, so good. Here it is. Firstly, we will look at the requirements, calculate the carrying amount of the investment in Barton at 31st December, including the exchange gain or loss arising on its retranslation, which was recognized in the consolidated statement of the Woodfleet Group for the year ended 31st December 2004. Four marks available for it. Then explain within calculation the accounting treatment of matter in the consolidated statement of the Woodfleet Group for the year ended 31st December X5. 12 marks available for it. And then we have to use the exhibit 2 accordance to IFRS 9. Explain how to correct the treatment of the hedging arrangement in the consolidated financial statement for the year ended 31st December X5. 4 marks available for it. And then finally use in exhibit 1, 2, and 3 in previous answers. Adjust the populated spreadsheet response option to correct the draft consolidated statement of profit and loss, other comprehensive income for the Woodfleet Group for the year ended 31st December X5. Right. Okay. So these are the requirements. And now we will look at the first requirement, first exhibit in which we have to sorry, calculate the carrying amount of the investment in Barton at 31st December, including the exchange gain or loss arising on the retranslation, which was recognized in the consolidated financial statements of the Woodfleet Group for the year ended 31st December X4. Here is the 4 marks for it. So, for that purpose, let us look at the on 1st January 2004, Woodfleet acquired 40% of the equity share capital of Barton for $120 million, achieving significant influence. Okay, let us significant influence. Uh, Barton presenting functional currency is the dinar. On this date, Barton had retained earning of 42 billion dinar and no other components of equity. On 1st January 2004, Woodford share of their fair value of the Burton net assets was lower than the cost of investment of 120 billion dinar. See, yeah. On 1st August, Woodfleet sold a 30% holding in Barton for 140 million dinar. This reduced Woodfleet's holding to 10% of the equity share capital of Barton, meaning that it lost the ability to access the significant. significant influence over its investment. Barter does not meet the definition of the discontinued operation. Okay, so then on just a second, I have to adjust the screen. On on 1st January, Barter had retained earning of 89 billion and no other components of equity reported a profit for the year ended 31st December X5 of 23 billion. Okay, but the valuation of the investment in Barton measured at the same carrying amount as at 31st December X4. No accounting entries have been recognized in draft consolidated financial statements. Respect of the Barton's current year profit, the cash proceeds from the disposal translated as the exchange rate has been recognized in other investment income in the consolidated SOPL and OCI. The fair value of the remaining 10% 5 and 47 million dinar at 31st December X5. Woodfleet measures investment in subsidiaries and associates at cost in its individual financial statements. Other investments and equity are measured at fair value through P&L in accordance with IFRS 9. And then we have rate of exchange rates which were provided below. 1st January average rate, 31st December average rate for 7 months from 1st January to 31st July. So first we have to consider these three, the last three. Okay. So let us one A part one carrying amount of the investment in barter and the exchange loss at 31st December 2004. Dinar rate and dollar in billion. Cost of investment on 1st January 2004. It's 120. The rate was 10.71. Then share of investment, sorry, share of movement in Barton's reserve. Reserves, so 40% into how much we had, 89 million dinar, 40 million dinar, 18.80. So it is 1.46. Carrying amount of investment on 31st December 2004, we get 120 plus 18 with a 138.80. Uh, the average rate is given 14.5. Carrying amount on 31st December is given 9.57. Now, here it is negative 2.60. Exchange loss requirement 4 bucks are we get 4 bucks so far. Uh, let's move to the word processor. Accounting treatment of pattern for the year ended 31st December 2005. Big requirement it is accounting treatment of pattern for the year ended 31st December 2005. Uh, so from 1st January to 31st July, first we have to explain. Let us bold it. So for this, what we will say now, Bata Company was an associate for the first 7 months. For the first 7 months of the accounting period, it should be accounted for using the equity method. It should be accounted for using the equity method. A share of profit of how much? It is 40% multiplied by 23 billion dinar divided by 15.3 into 7 divided by 12, we get $0.35 billion. Second, $0.03 million. Translated at an average rate for the 7 month period, should be presented within the investing section of the consolidated statement of profit or loss. Now, for further exchange gain or loss calculated in the spreadsheet. So we will move to the spreadsheet of once again. And where is the spreadsheet? Where is the spreadsheet? Here is the spreadsheet. Yo, 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 yo. Yeah, we get it. So here I will mention part two, first 7 months exchange gain or loss. What we will say over here now, again, same headings, dinar in millions, the rate, and dollar in millions. Carrying amount of investment on 31st December 2004 on 31st December 2004. How much we get? 138.8, 14.5. How much I get? 9.57. Share of Barton profit from 1st January to 31st July. Share of Barton profit from 1st Jan to 31st July, which is obviously the 40% of 23 million dinar for 7 months. So 7 divided by 12 months. And here it is provided in the question 5.37. The rate is 15.3. We will get 0.35 carrying amount of investment on 1st August. What was that? Is equal to this plus this. Okay, the rate is given in the question 15.7 and 9.18 closing given. Now we have to balance it. So this minus this minus this. 9.18. So this exchange loss should be recognized. Just a second for let us highlight it. Yep. Now move to the word processor. In word processor, what we will say further. This exchange loss should be recognized in the other comprehensive income. This exchange loss should be recognized in other comprehensive income. In short, you will say OCI. Okay. Uh, in the statement of profit or loss, in the consolidated and OCI, it should be presented. It should be presented as an item which might be reclassified to profit or loss in future periods. Then we have disposal of bartered shares on 1st August 2005, in which we will say that on disposal of the 30% holding of shares, holding of shares, Woodfleet loses its ability loses its ability to exercise significant influence, and therefore it must de-recognize the investment in the associate. A profit or loss on disposal is recognized. Is recognized in the investing section of the consolidated statement of profit or loss. This is calculated for calculation. Refer spreadsheet. Now, Let us move to the spreadsheet now. Disposal calculation is my heading over here. Now again, here my headings are dinar in million, the rate, and the dollar in million. So I will mention fair value of remaining 10% holding. What it is? 140. What is the rate? 15.7. So we will get less carrying amount of date of disposal. Oh, sorry, it's not fair value of remaining 10%, it's sale proceeds. Sale proceeds. I'm sorry for this, folks. Uh, it's sale proceeds. Then definitely we will move fair value of 10% holding. 40, 15.7 will get 2.55 less carrying amount at date of disposal, folks. Uh, 9.18. Foreign exchange losses reclassified from OCI. Dollar 2.60 million plus 0.74 million. It's 3.34. There we go. We have a loss over here. Let me show you how. Is equal to this plus this plus this plus this. So it is a loss 1.06. Right. Let me highlight it. Control B. That's it. Now we will go back to our Word file. Now, what we will say further that, The exchange losses previously recognized through other comprehensive income are reclassified to profit or loss upon disposal of the associate and presented as a reclassification adjustment in OCI. So the dollar 8.92 million proceeds recognized in other investment income in the statement of profit or loss must be removed. So, so far so good. I hope you get it till here. Uh, that's how you should do it. The things. Now, it's not the end. Now we have to move from 1st August to 31st December X5. From 1st August to 31st December 2000 X5. According to IFRS 9, Woodfleet should initially recognize its remaining investment in Batten's, not Batten's equity shares as financial asset measured using the will be divided by the rate of the 1st August 15.7, which was, so I get 5 billion. It should then remeasure, it should then remeasure the at the reporting date with the loss in the equity shares. Yeah, the investment and the shares Right. So just a second, it was just a glitch in the system. Got disconnected. I'm continuing now. Yeah. So what I was saying, the investment in the Batten's equity shares represents a non-monetary financial assets which is measured using a fair value model. Fair value is denominated in a foreign currency, spot exchange rate translated using the spot exchange rate at the date of remeasurement. The amount to 47 million dinar divided by the rate, which is 20.6, we will get dollar 2.28 billion. Okay, which is a loss of dollar 0.27 billion. Dollar 0.27 million. How? See, 2.28 minus 2.55 is recognized in the investing section of the consolidated statement of profit or loss. The exchange differences arising on the retranslation of a non-monetary asset are recognized in the same way as the gain or loss on the remeasurement to fair value of the underlying item. And so there is no need to break down further the loss of how much dollar 0.27 billion. By the way, we are done with this part. I hope it is clear till here. Now we are moving to the next part of the question. So for that, let us look at the requirement once again. What was the requirement and what were they saying? Okay. Part B, using Exhibit 2 and in accordance with IFRS, I explain how to correct the treatment of the hedge generated in 31st December 2000 X5. 4 marks available for it only. Wow. Okay. There understood. We'll look at the requirement. Then we will move to this exhibit 2. So what they're saying on 1st November 2000 X5 Woodfleet entered advanced stage negotiations for the purchase of a factory buildings situated in a country which uses the krone as its currency. The purchase price for the factory buildings will be paid in krone. The purchase is not expected to complete until March X6. On 1st November X5, Woodfleet entered into forward contract to manage the foreign currency risk arising on the highly probable future purchase of the factory buildings. The forward contract will be settled in cash. The fair value of the forward contract at this date was nil. The arrangement was designated as a cash flow hedge, and all hedge effectiveness criteria were deemed to satisfied both at the inception at 31st December X5. By 31st December X5, a loss of 5 million had arisen in respect of the highly probable future cash flows. The fair value of the forward contract at that date was 5.4 million. In the draft consolidated statement of financial position, the forward contract has been remeasurement with the fair value. The gain of 5.4 billion has been recognized in other comprehensive income OCI in the draft statement of profit or loss and uh, OCI. So again, for this part, we will move to the what I would say. Yeah, word processor requirement B, hedge accounting, and here it is my solution. According to IFRS 9, the cash flow hedge reserve within other components of equity is adjusted to the lower of the cumulative gain or loss on the hedging instrument from inception of the hedge and the cumulative change in the fair value of the hedged item from inception of the hedge. So the portion of the gain or loss on the hedging instrument gain or loss on the hedging instrument which is determined to be an effective hedge That is the lower of the cumulative gain or loss on the instrument and item as explained above is recognized in OCI. Okay. Uh, any remaining gain or loss on the hedging instrument in the hedging instrument is recognized in the operating section of the statement of profit or loss. So far, so good. Entire entire gain on the remeasurement of $5.4 million in profit or loss. However, $5 million of the gain should have been recognized through other comprehensive income treated as an item as an item which may be reclassified to profit or loss dollar 5.4 million minus dollar 5 million, that is dollar 0.4 million of the gain is recognized of the gain is recognized in the operating section profit or loss over the change in value of the item. So far, so correct our headings. Yeah, we are done with requirement one, requirement two, one A, one part one and two. Then requirement B is also done. Now let us move to the. I guess we have our last requirement now. Yeah. Using the exhibit 1, 2, and 3, your previous answers, adjust the pre-populated spreadsheet response opinion to correct the draft consolidated statement of profit or loss and OCI for the Woodfleet Group for the year ended 31st December X5. The calculation of the profit and total comprehensive income attributable to the equity owners of the Woodfleet and the NCI is not required. Okay. So uh, so we have to use the pre-populated spreadsheet where it here it is. There we go. I want to increase the size of it as required now. So here it is. It's in millions. So we have so many things over here. We will require intra group sale over here. We will require URP here. Unrealized profit. Also a share of associate profit will be needed over here. Let's increase the size of it. Then further, what we will require disposal of associate of associate. Okay, a little bit. Yep. Then further, what we will require favorable value of PNL loss. Then cash flow hedge. And finally, we will have wood fleet group redrafted. yes, 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 yes. Here it is. Uh, we will do first workings over here. Amount to be eliminated from sales, sales and cost of sales, 50 divided by, which is how much? 70. Okay. Then we have sales and in percentage over here for the URP purpose. Definitely, it's 13 million, and the percentage and the markup is 100. Sorry, margin is 115. We already looked at it question. Okay, the cost is always 100%. Remember, so the cost. Yes, yes, yes. 11.3, and it is always 100. Remember, the cost is 100. So now the difference we will get this minus this. Yep, 1.70, and here it is. This plus this 50. Now, starting from the revenue, first we have intra-group sale minus 70, and we will move to this part. Woodfleet group reflected this plus this 782. Bang on. Then cost of sales 70. So is equal to this and minus this. Is it done? What? Oh man, is equal to this minus this. Yeah. Uh, oh, sorry. I made a mistake over here. Avoid such mistakes. Yeah. 9512 is the correct over here. Then we will get our gross profit is equal to this plus this. Yeah. 3270. Sorry, 70. Okay, then anything in admin expenses related to IT and here control V. Control C, control V. You will get lot to do. Okay, then selling expenses. Anything regarding selling expenses? Do we have anything regarding selling expenses? Control V. Then anything regarding operating expenses, other operating expenses? No. So just go there. Control C, control V. Anything? No. Then we will move to the operating profit. So that's very simple. Move up here. This plus 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 649. Then share of associates. Uh, Definitely we have. Yeah, here we were doing one mistake. Sorry for that. It's minus 1.70. We forget it to incorporate it, and now is equal to this plus this plus this. Okay, and one more thing regarding the share of associate. It's 113 and yeah, 113 H. So 113 and 0.35. We get here 113 plus yo. Then next thing, loss on disposal of associate. We have minus 1.05. So just click it over here. Other investment curve is over here. Other investment income, and then minus 8.92 regarding the disposal, then the 0.27 and 5 related to the exchange losses. So 0.27 and oh, it was negative, it was losses. Remember what am I doing? 0.27 and minus 5. Yep, done. So it is 58 plus control Z. Sorry, 8.92. Yeah, minus 8.92. So is equal to this plus this plus this. 43.81. Now we will get profit before 647 plus and plus. We'll get 803.41. Bingo. Yeah, let me highlight. Nothing on interest expenses or borrowing, so we will just control C it and control V it. Is equal to 803 plus 781.41. Anything regarding income taxes? No, we just have to copy paste it. Control C and control V. Uh, then we will get profit for the year, which is equal to 781 plus 200 is 565.41. Other comprehensive income, then we have exchange differences on translator of foreign 79. Where is PURP, 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 PURP? Yeah, here it is. URP. So regarding the URP, we had minus 0.74 exchange loss. Then we had regarding the disposal, we had, remember, 3.34 in total, we computed it. So, yeah, 3.34. Then we had regarding the cash flow hedge. We had 5. So in total, it will be 79 plus this plus this plus this. We get, oh, Control X. Sorry, I have to place it down. Come on. Control X. And down get. And yeah, Control V. Come on, come on, come on. So in total, 5 and so it will be, yeah, I have to correct it. Otherwise, my presentation could have gone wrong. So 565 plus and plus, there we go. 494.01 total comprehensive income for the year. Total comprehensive income for the year. And that is how you should do it. And we are done with the first question. I hope you get it. See you next time. Till then, take care. Bye bye. Stop you.